Hey traders, Todd here. Welcome to the Wednesday webinar. Let me just get a quick confirm from my team that we are in fact good. Let me know that if we're getting any kind of feedback here, guys. Let me know if we are good to go. Okay, good. Perfect. Any echoes? Any echoes coming back here? Sounding good. Okay. We're going to get rolling here right now, guys. So we've got a good session here. Let's jump in. Let me get these questions up. I'm getting a little bit better at this, guys. Let's turn that one down. Okay, perfect. All right, so welcome. Wednesday webinar. We have a good session for you here. If you don't mind, if you're watching here or if you're watching the recording and you're appreciating the sessions, as you can see, we're making incremental gains in this technology, which is really fun. Hit the like button on YouTube, that little thumbs up button if you don't mind. Let us know you like it. Throw a question, comment, insult down below. Get the engagement going. I do see questions. So, all right, we're rolling. Okay, markets. Interesting. We're heading into earnings season. A lot happening here. This is going to be a really important earnings season. Okay, it's going to have, I think, a lot of implications as to what the next, not only next couple of weeks, but I think the next couple of months, and believe it or not, I think it's going to set the tone for the year. We're in a very peculiar position in the stock markets based on the Elliott wave count. So obviously we're going to talk about that. Show you some live positions that we're in. Going to show you both our option trading as well as our longer term portfolio. I do have to take a loss. Obviously, I'm not going to go through here until I'm not going to be able to trade it live with you. I will do it with my members. I am in a position where I believe I now have to take a loss. This is real trading. I'll show you the loss. We have winning trades. We have losing trades. We keep it real. That's the only way to operate in this industry with integrity. Look at some questions, comments. We're going to look at some option strategies and show you some trades that I'd like to move in with my members. Okay. I'm reading you some of the questions here. Okay, and team, as my team is listening, if I get talking and the screen is not in the right position, please let me know. I have Slack up. Okay. All right. Let's go. Number one, indexes. So here's where we're at from an Elliott wave point of view. The question on the table is, are we in a new bearish trend? As of now, this count is looking increasingly unlikely. I was working this as a possible third wave decline. As you know, guys, trend waves within a good 5-wave move, namely 1, 3, and 5, must break down into 5 smaller waves. So if we look inside of this wave 3, there is a good possibility, as I just dropped down to a 1/2 day chart, that we are about to overlap 4v2. That's no good. In a good, strong, higher degree third wave, you should see the corrections being removed from one another or not interact with each other. We're getting really close over the last 2 days, and if we open up, and it looks like we will because futures are up right now 0.5%. There's going to be an SPX cash open print above invalidation. So what does that mean? Well, it means it's probably not a 5-wave move down. So I'm actually going to have to change this count now. The only thing it can be is if this is going to continue lower, and it may, it's going to have to be a 1-2-1-2. So what does that mean? Well, that means we could be heading into a potential wave 3 of 3. And that's quite a scary proposition, okay? Because that's where the biggest moves happen. So if that's going to be the case, this is what the wave count must be. I'm prepared for it, okay? I'm prepared for it. So if wave 2 is in fact going to happen, it's probably going to happen and begin from higher prices. I just did a retracement of this drop down in 1 up in 2. Your 61% retracement of the December drop is going to be 2617, and then the next one, the 78%, is at 2696. I have a feeling the market is, if in fact it's going to drop, it's going to go from that zone right there. I have a different interpretation, okay? If we are not in a 1-2-1-2, we have to entertain the possibility that it wasn't an impulsive drop from September, but it was just an A, B, C drop. What does that mean longer term? That has huge implications, not only for the next couple weeks, guys, but for the next couple months. If we're doing an ABC down, we might be looking at, it's possible, this kind of interpretation right here. Let me clean this up. It could be that we are setting up for a triangle or a flat in wave 4. The count that I have this up, let me get that off above my head there. I can see wave 2 sitting on top of my hair right there. Isn't that funny how that works? So what that means is if, in fact, wave 2 was back here from May of 2010 into October 2011, then we have wave 4 that would be of a similar depth and or time, okay? So if you look at how long wave 2 lasted, equality in current wave 4 would be right here at 4v2, which would be February of 2020. And that's just to equal the time elapsed in wave 2. So there are a couple different interpretations that can be made from here. This is a running flat, okay? So those of you who are a little schooled in Elliott wave might be thinking, well, if this is a sideways correction, the guideline of alternation in the Elliott wave theory says that if one correction is sideways, the next one is very directional. So it could be that we're just going to do an ABC down. That might have been the low, and we're gonna move to new highs. I don't think that's going to happen. I think something like this is much more likely. Every correction in the Elliott wave world that starts with a 3-wave move, ABC, follows up with another ABC, another move up. So with a little bit more strength heading into earnings season, guys, I am just about with our members to secure the low from the 26th as an ABC drop. That means we have minimum another ABC rally. Okay, and in fact, I'm going to do that now because, again, we're going to open, even if this is, in fact, ABC down, an ABC shaped like this is going to be a zigzag, which traces 5, 3, 5. Okay, so it's likely that we are going to go above here, invalidation is going to happen. That's not going to work, so we have to consider this to be done. So what does that all mean? Well, broken down very simply, I don't know what the wave count is. Okay, I don't know what the wave count is here, but I can tell you, based on both wave counts I'm showing you, both say higher now. We have to adjust. Okay, we just came from a series of looking for bearish trades on the downside. I am in a short position. I've reduced half of it. I was on CNBC's Fast Money last night. I was talking about this with Melissa. I am short the S&P. I have a losing position on. I'm going to need to cover it and get out, okay, and look and readjust and get on the right side of the market. So if this is an ABC drop, again, chances are we're going to have another three-wave move. And that's going to leave two of the three Elliott wave corrections still possible, either a flat or a triangle. For all intents and purposes, it doesn't matter, okay, because we should have a three-wave rally that takes you towards 27, 28, 2900, okay? So the retracement that we're looking at here, if I just do a retracement of the Sep to December drop, the 61% is at 2700, and then the 78% is at 2803. So the way we're going to be looking to position is to get up into the zone right here, okay? Now keep in mind, okay, I'm looking at 27 to 2800 in the S&P. I'm looking at an alternate count also. This one says we only go 26 to 27. But keep in mind, both of them say we go to 2700. That's how you get confluence. That's how you get conviction. Sorry. Let me get out of the way. 26 to 2700 based on this bearish count. As I'm saying, I have two interpretations, but both point to the market going higher. Okay? I'm reading some of your questions here. Richard, it seems to be pretty confident. Green minor B is 1. Which market give me more information on green B. I don't see that, Mr. Richard. So, you know, the other issue with this on the downside is if this is in fact wave 1, that really doesn't look like a 3. That doesn't look like a 5-wave move. This looks like a 3. So that becomes quite an issue right there. There was an interesting comment on the last session. Okay. You got to give me more information, Richard. Tell me time frame and from where to where. Your previous wave count that doesn't mean anything. So tell me where exactly you want me to take a look, and I'm happy to engage. There's an interesting question from a comment from the last session, and I just wanted to go over this. Felicity wrote, what's the reason for multiple alternate counts in the S&P? What indicator supports the counts, and where are the invalidation points? You have to back your counts with that evidence. Otherwise, you may be just perpetuating the view that EW is a subjective mess. You're much better, I trust. And I kind of enjoyed that comment. I kind of laughed at that, and I agree. This is the biggest challenge that I have in my world. I've been doing Elliott Wave for over a decade. I've traded for a hedge fund using Elliott Wave. I've worked with some of the best Elliotticians in the world. I've been selected by Elliott Wave International to be the company that they are promoting to take Elliott Wave counts and actually put real money behind them, issue trade alerts as I trade my own capital live. And I take huge exception with the view that the subjective nature of Elliott is a fault. I would actually say and propose to you and challenge you to think, well, what form of analysis is not subjective? Technical analysis in general is subjective. Trendline analysis, where do you draw the trend lines? Moving averages, which trend line do you use? Support resistance, is support supposed to hold? And what happens if it breaks? Is it resistance? Fundamentals, are we in an environment where higher interest rates are in fact good for the underlying market? It seems to be that Jerome Powell being quite hawkish, trying to boost up interest rates in reflection of a stronger economy, it doesn't seem to me that any fundamental analyst can tell me if that's a good thing or bad thing. It seems like the market is trying to decide whether that is a good thing or bad thing every single day. We might be in an environment where mediocre earnings and fundamental data might actually be back to being a good thing for the market. So Jerome Powell doesn't have to hike rates. Okay. The data and there's no formulaic approach in terms of quality trading. If you need an A plus B equals C formula to trade, it's not going to work for you. It doesn't happen. Okay. Trading is all about developing your EQ, which is emotional intelligence, and trusting and having confidence and not being conflicted. The fact that you can't know the future. You can't. All you can do is put yourself in the best position with all the tools available now, managing your risk while maximizing your reward. There's no formula to success. If you're trying to buy a formula to success, you're just being kind of duped by the marketers of the world. So Elliott Wave for me is amazing in that it does help me. It's kind of like game theory. It lays out multiple situations and multiple scenarios. And just like a general, and I'm sure my members in here, let me know who my members are, who are tired of hearing this, and that a general will never go into battle with one plan and saying this is the only outcome that I see or will allow to happen in the war. You're always going to have multiple plans, contingency plans, backup plans to minimize any adverse impact from the enemy winning. You always got to have a retreat plan. You always got to have an attack plan. It's always this. That's how trading is. So I don't think that Elliott, the subjective nature of Elliott is a shortcoming. I think it's a strength. It's one of the few methodologies in the world that actually embraces the primary, alternate. I even track 2 or 3 counts. I'm always looking at multiple situations. And there's no formulaic approach to Elliott. Okay, it's truly a blend of art and science. So, when Felicity comes back and says EW is a subjective mess, I think all of analysis is a subjective mess. Trying to foretell the future with less than perfect information is quite a messy game. And you got to find a filter or a lens that allows you to see multiple situations in the future as to minimize any injury to you or your trading account. Okay. So if you're trying to find a methodology that's formulaic, I mean, do you really think you can make millions of dollars just following a formula? Anyway, so let me know what you think there. Okay, Richard, awesome. So Richard, if you have a count, maybe I can find a way to do this. If you could post a chart, I don't mind taking a look at it, or if not, I'll review next week. Okay. So yeah, let me know. Okay, but I enjoyed that. And she's not breaking my chops too much here. She's like, you're better than that, I trust. And yeah, I mean, that's fine. I have invalidation, but I don't want to come in and, we really get into the nitty gritty of Elliott, and I don't want to scare everyone right in the beginning until you've really committed yourself and you learn Elliott. It's amazing. So it's changed my trading forever. So, okay, so that's that. Okay. So what does that mean if, in fact, we are in an ABC, which it's looking increasingly like that? Well, it means that we could be range-bound for another 2 years, okay? We're going to have to shift our trading tactics. And this is another thing that I love about Elliott. For options traders, it tells you, should we be theta positive? Should we be theta negative? Should we be paying for premium, or should we be just trying to get the melt of options? If we kind of poke above 25, 80, 90, then into the 2600, we're going to kind of go up here. I don't think we're going to break out, but then we're going to fall back. I think we could be, for the next 2 years, kind of sideways. So that's going to require us to change our tactics. If you're trying to buy breakouts and sell breakdowns following indicators, It's going to be nasty. It's going to be really nasty for you for, I think, the next couple of years. This is very much turning into a trader's market, because I think the Fed is, the Fed's at odds with Trump. We've got, Jerome Powell that just did a big about face. He was on autopilot with the balance sheet reduction. Couple rate hikes next year, and the stock market's saying, "Oh my God, what are we doing here?" And then he's like, "Oh, just kidding. I want higher stocks. I'm going to listen to Trump and foster price stability or foster growth, I guess. Not worry so much about getting that unemployment rate back up to 5% and get away from maximum employment and blah blah blah." So we have a Fed governor now who's playing the stock market as well, and they always are, but I think that's going to kind of put the Powell put back in the market, just like we had the Bernanke put. So what does that mean? That means sideways. That means we got to change our style. Options are a wonderful way to kind of trade these ranges. We like to do option butterflies. You can kind of skew them on a directional basis for the move up. For example, how many of you guys are trading options in there? How many of you guys are trading options? You can go out and just pay for options, but if you're not right in terms of the time and direction, specifically within an Elliott wave correction like that, it could get very costly, and it could be rather unpleasant. So one of the trades that I'll probably be looking to do with our members, we're going to see how we open it. Again, we're going to talk about earnings here in a little bit, but butterflies are a great way to kind of take advantage of this. As I mentioned, this is my losing trade right now. I have one on that was looking for the S&P to get down towards 2350. Okay, 2350 in the Jan 25 options. 2350 would have been a payoff of about $18,000. I was looking to get down to 2350, right? Just looking for a 5-wave move down. I was looking at 1, 2, 3, 4, and then get down in that area. We're starting to get some strength, okay? We're starting to get some strength coming back. That trade is not working. I am going to be at a loss. This is well within the amount of money that I plan to lose on this trade, so this was just perfectly accounted for. I have a losing trade. I know when the trade is wrong. You got to get out, minimize any additional drawback, and just continue to move forward. That's fine. I am hedged in my options portfolio, as I mentioned, on the downside. I do hold longer-term positions in my portfolio, okay, my stock portfolio. We are positive on this account. I started this with $100,000 about 2 months ago. We're at $100,450. The S&P is down about 5% in that period. So we're far outpacing the S&P in terms of positions. These are the positions that I'm in. We are in 50% cash. We have a lot of cash on hand. So we're going to be making some moves pretty aggressively and continuing to hopefully outperform the S&P on a stock trading basis. And this is kind of a longer-term portfolio account. All right, so that's that. I've been talking about that. So I've got my longer-term stock account that I put out there for my members, and we have our shorter-term options account that we also put out there for our members. And this is all live capital. Okay, so let's talk about some of the trades that I might do in the options account. If we're trying to get perhaps up towards this zone right here, we probably should be able to get up to 2,800. I'd like to try to see the market moving up in the A wave towards the old highs at this point, around, let's say, 2,750. We have earnings starting on the 14th. Financials kick us off. Financials are very weak. I was talking about this on Fast Money last night. Financials are very weak. We got to break through some resistance on the overhead to get through and allow the S&P to go back. We'll talk about that. The other thing we're going to talk about is FANG had a huge comeback. Facebook, Amazon, Netflix, Google had a big run yesterday. Are they beating down names coming back because shorts are covering heading to earnings? Possibly. Or is it the start of a new sustained move? I don't know. So if we are going to continue to move up, this is something that I'll give you an idea of what we might do here with members around 2750 in the SPX. So what we would do is go to probably the monthly Feb about 37 days out. I don't want to just buy calls or buy a call spread because, again, Elliott Wave gives us the higher context that we are in a range, and that matters for me. Okay, I don't want to just pay for premium because all I'm looking for is a little B wave move. We don't even need to go up to the old highs. I mean, we could go down even, fail at 2,800. We don't need to go all the way to new highs. B wave could be anywhere from, down here. We could make a false break, but I think we're going to kind of meander up. I don't think we're going to tear higher. So I'm going to change, the tactics I use in this. So if we're trying to get up to 2750, I mean, that's 180 points away. On the call side, we look at 2750s in the SPX. That the markets are only giving us a 5% chance that that's going to happen. These are a long way away. 2750s are a delta, a 9 delta. 15 delta is at 2715. 20 delta is at 2600, 2700 actually. So that's actually, we might need to go a little further out into those March options. 2750 into March. Those are 17 delta, so a little bit better. But if we were to set up some kind of butterfly, let me just show you what I mean by these. So if we do a butterfly, 2750, I'll drop it 50 points below, 50 points above. That's a $500 trade. Okay, $500 trade, and if we're somewhere in this vicinity at expiration around 2730 to 2760 area, max profit would be $4,500, $3,000 here, $3,000 here. Trying to get up into that zone, that's what we're looking to do. The theta is only 77 cents a day. When you're doing a butterfly that's so far out of the money, you're going to pay a little bit of money. But if you were to do a straight debit spread or a call purchase, the theta is going to be much higher. This is your delta. Every 1 point move in the S&P is going to give you a $2.22 profit. Again, max loss. If the stock market crashes, you only lose $510. If the crash is higher, you lose $510. But anywhere in here is your profit. Now, to make this a little bit more directional, you can move the calls around. Okay, if I were to drop the 2700, let's call it 10 points lower and go 2690, I'm going to pull in more positive delta. All right, so if I'm bullish just by going 10 points, now all of a sudden I'm paying a little bit more theta, but I've doubled my delta. I went from $2.22 to $4.30. And you also notice that blue line at expiration, guaranteed profit of $490 if we go up. My max profit at $27.50 would be $5,200, and my max loss is still, no, I got to do that. My max loss is now $830. So I increased my loss by $300. My max is still $5,100. 170 top side. I'm looking at blue. So this is a way that you can begin to take advantage of some of the theta. As the market moves up, that theta will go from negative to positive, and you will actually be making money within the body of the butterfly. But again, this is using Elliott to give you context as to what kind of environment we're in. So that's just letting the market get up towards, this would be ideal right here, 2750 on this day. I want the market to be right there. In March, 2750. Does that look unreasonable? I don't think so. We're risking 830 to potentially make $5,000, and then you can look at the profit and loss throughout the life of the trade. Let's say we're out here well in earnings season. Here's Feb, middle of Feb. If we're at that point, we're up $788. Pretty good. Okay. I won't let this thing go to max loss. You'd have to let this thing go all the way to March expiration, and you'd lose 830. If the stock market goes down to 2,600, on February 15th, I'm down $5. Okay, if the stock market goes down to 25.50 on February 15th, I'm down $400. You have to hold this thing all the way to expiration to realize max loss. So really, your loss is only about $400. Okay, that I usually give it a 50%. So at middle of February, if you're on the target 27.50, you're up $700-800, which is double what your risk is. That's a good trade. And then if you can hold it, and you really start to get the melt, theta will go positive. See, it's at -3, and that's when you start getting the payday $3, $4, $5 on $400 risk. So it's when you combine options and Elliott is where you get the context where, that's I think how you look at multiple scenarios. And again, this trade could actually work if you are in this situation, or even potentially you could squeeze out a profit if we're in this situation as well, trying to get up towards 2,700. Okay. So that took a little longer than what I thought. But hopefully that helps. Okay, so let's move on from that. Too much time in the S&P, but I think that's an important conversation. All right, so financials. Here's the problem with financials heading into earnings. The 14th is Citi, I believe. Citigroup is going to kick us off. XLF right here. The problem is financials still, I think, are valid on the downside. You can't have the S&P going up and financials going down like this wave count is portraying. So, let me flip it over. So I think at some point this wave count that I'm showing you will become invalid. If you start to move above this low at about 25 in the XLF, that becomes a concern. And that's what I was talking about on Fast Money last night. So 25 is the low in XLF. If you start to break above that, then it really just suggests that this is a big A, B, C down. Okay, and it's actually it's probably more complex, WXY, so it would be ABC, X, ABC, and we're going to rally up. So if we start to break above 25, that's a problem for the bears in financials. JP, longer term, take a look at this count. Potentially just pulling back to the area of the prior fourth in JP Morgan. Also talking about this on TV last night, up through 103, there's going to be a lot of wood to chop because you've got several lows in here that were broken, now offering resistance. But if you can break up through 103 into JP, their earnings are on the 15th, I believe. Let me just take a look at that. JPM. You guys see all my cash balances. I don't care. Let's go over this. JP, so you see the volatility is at 32%. There's a little higher volatility. Those are the earnings. They're looking for a $4.37 move from the current, so that puts you actually up to 105 area. So the expected move in the options market heading into earnings is through the 105. That's going to be encouraging. Longer term, JP looks pretty good. Wells Fargo continues to be a weak stock, underperforming, no real interest there. Citi looks decent on a pullback here. That's not a wave count. Citi looks pretty weak as well. Bank of America, there's strength there in BAC. I've got to update some of my wave counts here in the financials, but those guys continue to underperform. FANG has come back quite well, and I'm actually tracking an account in Facebook that actually puts support nearby. A little bit of an ABC down into like 120. Prior fourth is here at 114. So we might have seen a big ABC expanded flat correction down in the lows, and we're starting to get some move up off the low despite how hated Facebook is, rightfully so. But at some point, they're going to try to right this ship. Apple, I believe, pulled back into some deep wave 4 support here. We're looking at this as 1, 2, 3, and then a pullback in A. Could be that same kind of concept that we're range bound for the next couple years between 230 and 146 in Apple. So butterflies, iron condors, calendars, double calendars, the theta positive kind of stuff for the next couple years could be the way to go in Apple. Netflix has been strong coming off the lows. They're doing really well with the content and the global awards, whatever the hell, when celebrities stand around and give each other awards, which I have no interest in, but they were giving Netflix the nod on some pretty good original content, and this is reflecting a strong move. So Netflix is actually looking pretty good. I'm looking to add Netflix to the portfolio. So FANG's getting a pretty good push. A couple stocks that I am holding in my portfolio I'm going to look to add, and I've been talking about this one on TV as well, as Twilio. Love the look of this stock. Good wave count. Triple top coming up here into 98. There's a big, I strike at 100 for the expiration. I'm going to be looking to trade this with our customers. TWLO into monthly, 9 days to go. There's a lot of open interest at the 100 strike in Twilio. 11,000 contracts to buy at 100. So whoever's holding those are going to try to push it above so they get some intrinsic value in those guys. Nowhere near the open interest on either the call or put side. So you got a lot of buying interest at 100. Twilio earnings are, when are they? TWLO. February 12th. So we got some time on Twilio. There's a couple other ones that look pretty good, like Etsy, Square. There's some good ones out there. Another one that I'm tracking and I did add to the portfolio was Boeing. I'm just kind of showing you some of our strong stocks here. I've got a longer term Boeing count that I like. Looking at this as the completion of a third wave. Green 3 breaks down into 5 waves right there. This is the monthly, so I'm going to break that down. Let's go to the weekly, get you a little bit more detail. So there's blue 4, looking for another push up. You could be 400, 420, 450 in Boeing. I added a third position to Boeing to the portfolio, and I'll be looking to add on BA. Okay. That's really what I wanted to hit here, guys. So at least. All right. Questions. How about some last minute questions? I didn't do Bitcoin. It's just we're long. It's kind of hanging around 3,900, not doing too much. Robert says Bob Miner has invalidation at 2641. Okay, I love Bob. Such a good dude. Good Elliott wave and Fib guy as well. 2641. 2641. I don't really know reason. Okay. Oh, he must be doing 1, 2, and then down in 3. He must be doing 1, 2 right there. 41. Yeah, that's probably what it is. Brian, that's a big question. Thoughts on when and how and often to transfer profits from your brokerage account to your personal bank account, keep X years worth? That's a big question. There's a lot of answers that I would need from you before I could tell you. That's very personal to you in terms of what your living expenses are. But I love that you're. Hey, Bart, what's up, man? My old buddy Bart Merrick. Real estate extraordinaire in Orlando. If anybody needs real estate in Orlando, go talk to Bart. Let me know. I'll get you in contact with him. Yeah, BA highly dependent on China-U.S. trade deal. I mean, who isn't dependent on this trade deal? Yeah, we could do crude oil. Apple is Boeing. There's a lot. I am my best interpretation of oil is we're doing a B wave rally up. 61, maybe 67. I do think there's upside opportunity there in the crude oil market. Longer term, I'm a bit unsure of the wave count. I don't know where I am here. For me, nothing really sticks out. I think this was a big old, oh shoot, hold on. Crude oil up to 61 to 67 right here in this B wave. And then this guy back here, I think, was a big old nasty triangular complex. So it signifies that this is a 3-wave move up. So we could be just kind of going complex, going sideways, which is the best that I've got on crude. All right, guys, we're going to leave it there. I think I'm kind of reaching for content at this point. But if you enjoyed it, please put a thumbs up in the... Please put a thumbs up in the YouTube window. I appreciate that. Drop a comment, question, insult below. If you want me to take a look at a chart, if you have a wave count, it's really hard for me to kind of read. I'm a visual guy. I like to use pictures. I always like the pictures in school rather than the text in the book. So if there's a chart that you want me to look at next week, get it to me on Twitter. You can find me at Todd Gordon Trade. Just search Todd Gordon on Twitter. Just tweet it at me or drop a link in the comment section below and we'll take a look at it. As I said, a lot of plans for this show. This year it's going to be pretty awesome. We're going to have guests and I'm getting more and more confident in different segments and we're going to make it like a real show. All right. See you guys. Hope you enjoy it and have a great rest of the week and we'll see you at tradinganalysis.com. We are full service. Trading, live capital, trade alerts, analysis, full service in the Forex, crypto, stock, and stock option markets. We have a new website up. My team's been hard at work on that. So check that out, guys. Right there, tradinganalysis.com. All right, have a good one, guys, and I will see you soon, all right?